Hello there, my crypto dump party friends. Welcome back to another episode of TA with MK. My name is MK, and I just wanted to mention that today's video I'm not going to give any in-depth or any real analysis. Just want to share a few thoughts on a couple charts. It is the weekend. I'm here in the United States. Well, obviously it's the weekend basically in the world, but what I mean to say is here in the US where I'm at, it is the afternoon on Saturday. So, I mean, it could be Sunday where you're at already, obviously. So, it's still the weekend no matter where you are. But the point being, on the weekend, I do try to get out and do some things. Going to go to some races tonight, see how that goes. I did it a few weeks back, and it was a lot of fun. Well, not NASCAR style, but just kind of some, I wouldn't call it amateur stuff, but whatever would be the next tier down, I guess, from NASCAR. But at any rate, just a local track here that has races every Saturday. I'm going to go check that out and see how that goes. But I just want to share a few thoughts on a couple charts. Bitcoin dominance, just kind of what I've been tracking on that and just what I find fascinating as far as how it's reacted during the Bitcoin dump. Also want to kind of talk about the total 2 chart, actually the total 3 chart, which is just a chart I've shared previously on the channel. It's just the total market cap excluding Bitcoin and Ethereum. And then I just also wanted to quickly mention something that I've been thinking about as far as the Bitcoin weekly chart goes, as far as the moving averages. So we're going to cover those just very briefly in today's video. No real in-depth analysis, just kind of sharing some of my thoughts. If you guys are liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Now, the first one I just want to quickly talk about is the Bitcoin weekly chart as it pertains to the 200 moving averages. Now, a lot of YouTubers, and myself included, have mentioned that in the past the 200 has acted as support, and then the 200 on all time frames is something that traders use to potentially open or close positions. But with the few data points that we'd had in Bitcoin's history, a lot of us, it's a lot of YouTubers or a lot of TA experts or just people that use TA to trade, had pointed out that, hey, in the past, the 200 has more or less acted as support like it did back here and here, right? Well, I started thinking about it a little bit more today, as we've lost this 200 support, and it looks like we've lost it, definitely at a bigger percentage than we even did back in the COVID crash, right? But I started thinking about it, and when you just take the 200 simple moving average, which is this yellow one, just at its core, as we know, it just takes the average of the last 200 candles, and that's the average price where that sits, which in this case, coming into this retest of it that didn't hold the support, that average was around 22,000. I know it was between like 22,300 and 22,500. Well, there's one big major difference between this bull run cycle than the previous, as far as it relates to the 200 moving average. And what I mean is the bear market back here, the accumulation phase of between like 2015, 2016, right, leading up to this blow off top, the price just basically went sideways that entire time. There wasn't really any major pumps, right, to influence that moving average, so it stayed pretty low, right, and pretty steady on a very even plane. Well, there was only about 50 candles that equates for this entire area right here. I didn't count it, but I know it's roughly around 50. And this was just a blow off top, right? Which is what we'd had in the previous 2013 cycle. As we know, we've covered that on this, this channel. I'm sure plenty of other YouTubers have as well. And then we had the blow off top in 2017, right? So of course, those 50 candles started to influence the trajectory of the 200 moving averages. However, it also, because it had a blow off top, came down pretty quick. So, you may have only had another 50 to 100 candles mixed in here. So over the course of all that quick up, quick down, it wasn't able to really change the trajectory of this by much, right? Therefore, when it came down to retest that after an 83% drop, that wasn't nearly as high as what we've had this time, because this time, not only do we not have a blow off top, although when you look at it on the weekly chart, it is basically blow off top 1, blow off top 2, but you take this whole move, and because you had number one, its big run up, which started to influence the price action or the moving average in an upward trajectory, you had it go up again, right? A whole nother pump that was even bigger than the first one, bringing it up even higher. On top of that, before this big move right here that we're circling, and now I'm starting to scribble, you also had this pump that happened in the middle of the bear market that was not something that happened back here in the previous bear market, right? And so these moving averages were far higher, as far as, in relation to, this previous bull run, as far as how far removed this got temporarily from the 200s. This, during this period of time, once this pump happened here, so I'm going to clear this back up just so I can show you this a little cleaner. But as soon as this second blow off top happened, this bull run, that continued. Instead of this just planing out like it would have done maybe around here and just been down here somewhere around 13 or 14K, this brought it up more, right? Because now the last 200 candles just keep on bringing the average up. And then, on top of that, like I said, back here, there was this pump. So I just think that it was probably unrealistic to think that history was going to repeat itself as far as that moving average holding up. Probably the more realistic would just be the average, decline. We have also spoke about that on the channel. That's where we came up with the 10 to 12K, downside targets, was that if you take, the top to the bottom of around, say, 83%, which was our average we came up with, it was around, between 10 and 12K, right? And not that it was super important, but I did realize my head was just in the way. So just to kind of get that out of the way and show you. So you can see here that an 83% drop, and move that up a little bit, would put Bitcoin around 11K, which we discussed in a previous video, between 10 and 12K. That would be in confluence with what Bitcoin's done in the past, from the time it's had its blow off tops or its cycle tops to, what ended up being the bottoms, was an average pullback of between like 80 and 85%. Now, the second fascinating thing that I just wanted to discuss in this video was just the Bitcoin dominance chart. As we discussed in previous videos or many times on the channel, you understand that if Bitcoin dominance is going up, that's generally bad for altcoins, and if it's going down, that's generally good. Now, obviously, I have a link or a video that I made that's about, I don't know, it's probably like 17 or 18 minutes long, where I go very in depth on Bitcoin dominance so you can understand it better. And I'll leave a link in the description for that, of course, so you guys can watch that. And the reason why it's important to watch that is to understand that why I use the word generally good or generally bad, because in this case, Bitcoin dominance, fascinatingly enough, is going down as Bitcoin's been pulling back, which, based on the simple term of that should generally be good for altcoins. Well, in this case, it's really not, because obviously if you've been holding altcoins, you've been seeing your portfolio continue to go down. But all it really means is that money is coming out of Bitcoin at a faster rate than the large cap altcoins, which to me is just fascinating. It doesn't mean that the large cap altcoins are something you would want to be holding right now, because obviously the entire market's pulling back. It just means as they're both coming down, Bitcoin is actually coming down at a faster percentage. More money's flowing out of it currently than, things like Ethereum and Atom and DOT, your higher large cap coins. So I have found that fascinating. However, real quick, just also sharing these thoughts, I wanted to point out, what is this doing? Okay. I wanted to point out that if we pull up the 1 week chart, we discussed this previously, that this huge, large falling wedge that had a 68% chance of breaking to the upside. I know you can't see it real good right now with all these in the way. Let me actually just delete these real quick. I can always fix this chart later. Oh, shoot. Well, anyway, the point is that you can see this top trend line that we broke out of, and I had mentioned in a previous video that it, we never really retested that. But of course, when you're looking at something like a weekly chart, obviously it took a long time that it consolidated within this pattern, it broke out. So it wasn't, crazy to think it could take a while before it finally retested. I say that to say this, is that we have had this nice little relief for alts, and all I mean by relief is just that they haven't been pulling back as fast as Bitcoin. But now I'm thinking if this acts as support, it was previously resistance, 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 4 different times. If this acts as support and then begins to trend higher, this would probably be the beginning of the bear market part, where you see altcoins basically just die, like have pullbacks that, we couldn't even fathom months ago, right? And this is just me talking out loud. Obviously, I'm not predicting anything, but that's just something we'll be watching closely over the coming days and weeks, is to see how it reacts to this potential retest, right? And then just the last chart I wanted to quickly just share some thoughts on is the total 3 chart. It is something I've talked about previously on the channel. I've actually got 2 videos I made where one was 3 charts you should look at every day, before trading, and then the other one was 3 more charts you should look at every day. So I will also link those in the description. But this chart, as I've previously explained, all it is just the total amount of money that's in the crypto space, excluding Bitcoin and Ethereum. So obviously Bitcoin and Ethereum are the largest 2. They make up a huge chunk of the crypto market cap. But this is just all the money in the rest of the coins. Like right now it's at 335 billion at the time of recording this video, right? But I was just thinking out loud, or thinking to myself today, if just from a time frame perspective, you had similar time frames as we've discussed in other videos as far as when the cycles have ended or peaked and stuff. So we had the blow off top back here in January 2018, right? That was the peak for the altcoins, and then they just retraced. Similar this time around, it was November, so it's just a month, 2 months earlier is all, but very similar time frame. And so then, of course, you had these little retraces and little relief rallies, retrace, relief rally, so on, right? And this time we're kind of doing some similar things, retrace, relief rallies. But just from a timing perspective, I would imagine we're somewhere in here, as far as the cycle goes. Somewhere in here where we obviously have, potential for some much more downside. A lot of people thought this might hold up as support, the previous peak, same way people thought 20K was going to hold up as support for Bitcoin. Clearly it hasn't. So we're looking at maybe potentially a lot deeper retrace on a lot of this stuff. But what I would probably be eyeing maybe would be something back down here around the top of where this peaked as resistance, and it took it forever to finally break that back over here. This area down here, which is the 786 retrace, level. Actually, I'm thinking that I need to put the 886 on my chart, but I'm thinking it's closer to the 886. But at any rate, I guess all I wanted to say out loud is just that I think you just look at it from a timing perspective, because let's say we are somewhere in the middle of like right here. You had at that point, before it even recovered back and started going on its rally, you had around 900 days. So you had 2.5 years, closer to 3 years, really. Well, 2.5 years basically before that ever recovered. So, there could be quite a bit of downside ahead, and we have talked about that as well. I'm prepared for that on the channel, that, a bear market doesn't necessarily mean it goes for 1 year. Now, there will be rallies along the way, which happened clearly back here for crypto. I mean, even these little moves from like 45 billion up to 80 billion, that's a double an increase, right? So I mean, you have some significant runs in there, but as far as an actual full-on bull run where you see price just go to the moon, we have potentially quite a while for this to still play out. At some point it will bottom out and spend more time going sideways, obviously, than just going down, and that's when you look to accumulate. So just kind of talking out loud. So nothing game-changing in today's video, just a few thoughts that I wanted to share as it pertained to a couple of those charts. Hope you guys found that at least somewhat interesting. And as always, if you guys are liking the content, please remember to like and subscribe, and enjoy the rest of your weekend. It's tea.